Before we delve into the stocks I mentioned, let's touch on Massmart, Walmart. Of course, a lot of people talking about that over the last couple of trading sessions. Simon, we touched on it yesterday. A hot deal, but not hot for many investors at this point in time in terms of getting into Massmart.
Yeah, the trend seems to be, the thinking seems to be is that it's fully priced and where's it going forward. Yeah. Maybe in a 5-year view. Chris Ekstrom, to you. I mean, Massmart, is it a hot stock now? Are you putting new money into it, or are you saying, yeah, good deal, but...
So great. Now it's time to actually use the gains that you've made and get into something else.
So in other words, sell Massmart at this point in time?
I think so. I think at this stage you've still got to bed down a merger. In other words, there's a bit of uncertainty hanging over that. One doesn't know how the minorities in any case are going to be treated over the longer term. So one needs to just see, how does that bed down? There's other
so if you were holding Massmart 143 and 144, you'd be selling at this point?
I'd say thank you very much. And,
very fully analysed, and I don't think there's much room for surprise.
So in other words, what would your move be on Massmart?
Well, I'd look for something else. It's reasonably expensive.
So sell out at this level,
yes,
if you could. Fantastic. Simon?
Okay. No, I mean that's a lot more. Last night it was like, maybe. This is saying, hey, no, take your money and run.
This is a good company. Let's face it.
But
from an
priced
investment point of view, it might be a bit too rich. Yeah.
All right, well, let's turn our attention now to South African money manager Cadys Holdings. It says that full-year diluted headline earnings per share slumped 48% to 23.5 cents. That's as gross operating revenue declined by 16.5% to 326 million rand. The company said it's looking at ways of building research capacity, boosting offshore distribution, and getting into electronic trading.
We've got a market cap 711 million, price earnings at 12, dividend yield at 6.9. They kept their dividend yield flat at 20 cents. Stephen, let's come to you first. I mean, that was one of the issues, and in fact they said typically they run a dividend cover of 2 to 3 times, and if they'd done that they would have paid an 8 or 12 cent dividend. Instead they dropped that cover, they paid 20 cents. In a sense it shows how tough they are, but they're saying that they can carry it because they got the cash. I always get a bit nervous when people start raiding the piggy bank to pay dividends almost.
Well, it's not a capital intensive business, and if you look at cover at Coronation, you get an idea of what they can do.
And then their costs are beyond bonuses. They know what their costs are going to be broadly for the year.
Correct. Yeah, they just the revenues from asset management seem to be stable to growing slightly. It's really the structures, securities and derivatives that's looks as though it's turning down.
Well, let's delve into those numbers, Chris. I mean, when we look at the assets under management, that dropped by 10.2 billion rand to 42 billion rand, even though revenues from this space is relatively flat, but slightly to the upside. Retail funds under management increasing 30% up. When you look at the overall performance, a bleak scenario that is playing out, but it seems that it's only sort of shifted towards one specific sector.
No, and one needs to appreciate these small houses will grow in fits and starts. A company like Coronation is very well established and has got an enormous amount of annuity income, and so this reflects some unreliability in the earnings. But I think they do have some confidence in terms of the cost. In the financial services sector, it's these smaller players, and I group them generally, this PSG, African Bank, Capitec, etc., as the place to be. All right, because the biggest players have gone ex-growth. It appears they don't have ideas to carry on. They might be too big for the economy. I'm not sure, what the issues there, but certainly if we look at these companies, Cadys, I think, on the whole, is one that's going to make it. Right, it's not going to eventually, shrivel up, but these results are very disappointing, and I would hope, that if one still has faith, that there is an opportunity to get in.
It's a very tough space, and with absolute respect to both you gentlemen who work in this space, obviously, but being a small asset manager, stockbroker house, I mean, when you're competing against the big guys, and the big guys, we're not just talking local, obviously in this day and age, it's international flows, etc. It's bulking up research departments, a hugely tough place to operate in.
Exactly, but there's the opportunities that are coming in the sense that your big players, like Allan Gray and Coronation, are looking at closing.
And they're getting too big in a sense, maybe.
They're getting too big.
Large.
So to get that performance, they're closing the business. So where does the money go? And you've got to look at other players. Now, the micro managers, if you like, the very small ones, you say, is their business going to survive? This has got a substantial core business that we believe would actually survive. And you say, now, is it good enough? And they're busy investing in the research, etc. So that actually suggests in the future the performance will come through. They'll attract the assets, and this is an asset gathering game. If you get the assets, you'll get the profits.
It's fascinating, Stephen, that Chris is talking about a game of survival in a sense. Do you think we could see a form of cannibalization within the sector at some point, where the bigger players perhaps start coming in and looking for acquisitions in the smaller space? And do you think Katie's will survive all of this?
Well, I think it will. It did make it an acquisition itself of African Harvest. And I agree with Chris. I think they're going to make it on the asset management side. Their funds they're very much a specialist fund manager, so they don't compete head on right across the board in the retail space. So I think there's scope for them there. But they don't the problem is they don't have the distribution that some of the bigger competitors have. So they've got to be very careful how they manage that.
And as you mentioned, securities came under pressure. The unit revenue fell by 24%. Do you think we could see a turnaround there?
Well, obviously markets in general pick up, but I'm wondering, where is the structuring side and the derivative side? They used to really rule the roost in that, and a couple of years ago they lumped the two together, so we can't quite tell which is which. Securities are very tough, and we don't know whether they still, although they might be market leaders, what the revenue prospects for them are in that game.
Oh, Stephen, staying with you, one of the numbers I pulled out was return on capital employed, sitting at 1.8, was 5.4 a year ago, 4.7 2 years ago, 17 3 years ago, 21. A trend in that number's coming steadily down. Don't we look at something like this and get worried that they're not reversing it?
Well, I think that I've already indicated, I think the one side, securities and derivatives, may be ex-growth. I don't know. We'll see. But certainly the growth prospect is on the other side. And I'm reminded of Coronation in the noughties. They listed in 2003, I think. And they actually battled. They had a few ups and downs. And for years they battled to get traction, even with very good performance. So I think Katie's is going to make it, but it's going to be a tough battle, and they'll have ups and downs. But they just have to persevere and find the niches.
It is about those niches, and I know, in the derivative space, Stephen's alluded to it already, in the FM annual surveys, they come out top pretty much every year. A couple of chaps I spoke to on the sell side said that they're very much interested in perhaps less traditional. They'll look at small caps, they'll look at mid caps, trying to get that alpha. And that comes to your point earlier.
Exactly.
Allan Gray can't, because they've got billions and billions. They can buy the entire small cap sector, wouldn't know what to do with it.
Exactly, and not make too much of a dent on their portfolio, whereas Katie's still can. And that's the point, is that one needs to say, do they have it to actually drive, drive performance? And that's where one has to actually judge them. But at this stage, they do have a good research team. The actual business itself is quite sound, and for that, and it's sustainable, it's profitable. They're able to actually pay bonuses to retain staff, because this is really a talent game, and that's why I think that this might be an opportunity to say, let's take this blip, and it might just prove to be a blip, and say thank you very much. From an investment point of view, it's where you missed out in Capitec and other hot smaller financial services groups. This might be one to
Chris, wouldn't you say that also the fortunes of the likes of companies such as Katie's very much linked to the future prospects of the overall market, in a sense?
Oh, yes.
That said, I mean, we know that asset managers, in a sense, during the downtime in the economy, during the financial crisis, perhaps became out of vogue because most were then opting for cheaper options such as ETFs and things like that. Do you see that kind of trend continuing, and where does that leave Katie's then?
The irony is that your active managers actually do better in down markets than in up markets, because in up markets, if it's Anglo and Billiton that's running away, no active manager will have 30% of their portfolio Anglo and Billiton. So that's a structural problem in a sense against the benchmarks. But in the downturn, investments go out of fashion, and that makes it very difficult business environments to actually operate in. But it looks like at least for the next, say, year or so, they've probably got a fairly good business environment to actually operate in.
So, Katie's hot or not?
Hot.
Would you be allocating money at this point?
I could do that, yes.
Fantastic. We'll hold you to it.
Stephen?
I think it's going to be a bit of a long slog.
So not hot for you then,
Not just
Stephen.
yet.
It's amazing because I find it quite fascinating that Katie's came under so much pressure given the fact that the markets have been doing so well over the past year or so. Perhaps not so much so in the first 3 months of this year, but perhaps in the past. Simon?
I'm, you know, Chris mentions Capitec, he mentions Coronation, my ears pick up, etc. But I'm going.
Because you hold Capitec, so you're part of the team that is smiling.
I want another Capitec. I want another dozen. I'm going with Stephen, not hot. I hear what Chris says, and I think he's probably right. But I think it's going to be a bit of a slog. I don't think there's any rush in that sense.
So another company that perhaps has raised a few eyebrows over the past few years, Pan-African micro-lender Blue Financial Services has trimmed its full-year net loss to 284 million rand from 1 billion rand, which puts the headline loss per share at 29 cents. Blue Financial Services hopes to continue working towards returning the firm to profitability. Over to you, Simon.
Market cap 1.6 billion. I really did check that 3 times. That is right. Price earnings, well, -1 in essence. Their price earnings is what their share price is. Dividend yield 0, and they've had a absolutely crazy time of it. Stephen, we know the story. What happened there? Dave van Niekerk, their expansion into Africa. The pre-National Credit Act, etc., and they got caught every which way. Moboya came in, kind of did a huge rights issue dilution. They seem to be turning the corner, but there's still risks. I mean, things are coming right. They're getting, I'm trying to find, I mean, the impairments, 27 million versus 548 as one number we can take. Things looking better, but still tough.
Net asset value of 0.1 cents too,
Yeah.
you might say. So they've got a long
Versus
slog.
minus 3.1 cents.
So the hole is smaller.
Right.
Sure.
It's going to be a long slog. They're making a lot of progress, and I think they may have even turned the corner. But I think from the small investor point of view, you've got plenty of time. You've got time on your side.
And if you were holding, I mean, this is a stock that was over 6 rand in 2000 and it hit 2 cents. If you were holding during that, not only have you seen massive wealth destruction, you've been diluted out of existence with that rights issue.
Absolutely, yes.
In terms of, let's look at the micro-lending space for a second. Blue Financial Services, how does that differ to the likes of Capitec and African Bank? And tell us why the other 2 companies that I mentioned have gotten the story so right and Blue Financial Services have gotten it so wrong.
Well, I suspect there's similar, ghosts of Unifer. Also, their controls not as good.
So it's about management in other words.
I think can we say they blew it? And and effectively, this is whereas it's in the financial services space, it's in that small space where there is growth, there is some excitement. This is something that still looks like it might not make it even.
An emphasis of matter on the audit opinion. You've got to read right down to the bottom to find that.
Yes.
And the like. And it's, look, I mean, I think a year ago the auditors were saying they were technically insolvent. They were technically insolvent.
Yeah.
They've righted that. I mean, they've got assets exceeding liability by 58 million. A year ago it was 2.9 million the other way. But still that emphasis, and that emphasis largely is, hang on, you guys went out there and lost R1 billion.
Not only that, it's also, relative to the asset base. Obviously, it wiped the asset base, the balance sheet out. But one appreciates that there's a turnaround, but that dilution means that the upside is very muted in terms of that downside that you would have suffered.
This is 3 or 4 times the number of shares in issue.
Exactly. So the question is, if you're trying to make this back, right, how do you do it? This is a company that may still, there's signs it's turning around, but, it still is on life support. How long will you get this rising, or will you get something like Mercantile or something where it just languishes, at very little for a long time without doing anything? That you can do better in another service. Look, if I were to choose between our last pick between Katie's and Blue, I'd definitely choose Katie's.
So would I, every time.
As a thing, yeah.
Okay, Stephen, let's get your sense as well with regards to future prospects for Blue Financial Services. We know that it's starting to post a bit of a recovery. It's still making a loss. What would be the turning point for you where you say you feel confident as an investor to head in without feeling that you are playing a speculative stock?
Well, I'd certainly like to see growing cash generation. I mean, the 278 million was not bad for a start. And a clear end to further impairments. We want to see that trend is broken, and we also want to see what is happening to the new, well, when they start making new loans, what happens to the impairments then. They do have in the African countries payment, deduction against civil service salaries, which is what the likes of African Bank used to have until about 5 or 6 years ago when it was abolished. So that of course is quite good money because it's relatively secure. So they're not without some merits, but it's going to be a long slog, and I think waiting.
So not hot right now then, Stephen, can I assume?
Definitely not.
No, not hot either. I think they're better prospects.
Yeah, this thing crashed to earth so hard, it's going to be a long time. Not hard. And to Chris's point, when they start to turn it around, there's been such a dilution that they've got to do so much growth just to get back to where they were.
And existing shareholders, hold on. Is that what the message you're giving out there?
I can still say you can take that money and do better elsewhere. You know, you've got to do a lot of hope, wish, ifs and buts and all the rest of it to actually get an investment case here.
Well, what would you be doing, Stephen, if you held Blue Financial Services?
I agree. I think it's going to take too long. You can do better in the meantime.
Fantastic. Okay.